Hello and welcome to our discussion on determining the cash flows when the balance sheet and income statement are given. In this example, we will try to prepare the cash flow statement because only balance sheet and income statement are given. When the opening balance sheet and closing balance sheet and income statement are given, it is possible to find cash flow statement because the change in the two items of the balance sheet can be explained by income statement and cash flow. So therefore, by observing the relationship between the items of the balance sheet and income statement, it is possible to find the cash receipts and cash payments for the period. So in this example, the opening balance sheet, the income statement for the period and the closing balance sheet are given. So now we'll find the cash from operation, cash from financing and cash from investment. So cash from the operation can be found by using an indirect method. In case of indirect method, we try to determine CFO by making the adjustments to the PAT and adjustments with respect to non-cash, non-operating and the changes in the working capital. So the PAT is minus 14,000. So non-cash is the depreciation, add back depreciation. Non-cash is the amortization of R&D, add back amortization. Non-operating interest is treated as a financing item, so interest is a non-operating, so add back interest on the loan. Then we'll see the changes in our working capital. So the working capital items are the operating working capital. So current liabilities will be creditors and outstanding. The current assets are stock, debtors. So change in the stock, change in the debtor, change in the creditors and the change in outstanding expenses will tell us about the changes in the operating non-cash working capital. So creditor, in this case the creditors have decreased, so decrease in creditor means an outflow of cash. So 6,000 minus 8,000. Increase in the outstanding expenses, so that means we have not paid money towards the expenses, entire expenses to the extent of 2,000 remain outstanding. The stock has increased, so increase in stock means we have purchased the stock and we have not used in the current period, so it will be considered as an outflow of cash. Decrease in debtors means we have collected money, so therefore 30,000 minus 20,000 is a plus 10,000. The summation of all these items will give us the cash from operations. So cash from operation in this case is 55,000. Then we'll find cash from financing decision. The receipts are the capital, premium, the changes in the reserves, changes in the long-term liabilities. So capital is a increase in the capital to the extent of 20,000. So we assume that to be issue of shares. We see the share premium. The share premium is, that means we have issued the shares at a premium of 30,000. So capital issued during the period at a premium of 30,000. no other receipts because the reserves, the long-term liabilities remain same. The payments here are with respect to interest. So interest is 3,000, and dividend in this case the company is having loss, so there is no dividend has been paid, so therefore the dividend will be 0. So the cash from financing decision is positive 40,000. We'll take cash from investment decision. There are no receipts from the investment, no income received, no plant sold, so no receipt. So the only payment is with respect to the acquisition of R&D, because the R&D has increased during the period. R&D has been amortized 60,000, but the company was not having any R&D in the previous year, so that means they have purchased the R&D, and the fact that they purchased the R&D and there is no creditors or liabilities for R&D, it shows that R&D has been acquired for cash and has been fully amortized during the year. So CFO is positive 55,000. So opening cash in hand is 40,000. CFF, the CFO is 55,000. CFF is 47,000, and CFI is 60,000 negative. So the summation of these four should give us the cash in hand. So cash in hand on 31st March 2012 is 82,000. So closing cash in hand is 82,000. So the change in the opening cash and the closing cash is due to the cash from operation, is due to cash from financing, and cash from investment decisions. As usual, let us also find how to find CFO by using the direct method. So CFO by using the direct method. In case of direct method, we try to understand the cash from the collections, cash from the cash sales, cash payments towards expenses, and cash payment towards the acquisition of stock. So the collection, in order to find collection, we need to understand the debtors. So the debtors, opening debtors 30,000, add sales less bad debt less collection will give us the closing debtor. So we assume that entire sales is on credit. Okay, no bad debt during the period because nothing is shown on the balance on the income statement, and the closing debtors is 20,000. So the collection is the balancing figure, 30,000 plus 70,000 minus 0 minus 20,000. So collection is 80,000. So collection from the debtors is 80,000. The payments made during the period is payment toward the creditors, payments for the purchase of stock. So let us find the creditors. So opening creditors is 8,000. So less the add the credit purchases and less collect less payments will give us the closing. So in this case, the closing is 6,000. We'll assume the credit purchases to be 0. So the payments that has been made during the period is 8,000 minus 2,000 minus 6,000. So 8,000. So payment to the creditor 2,000. It's possible that the company might have purchased the goods for cash, so that we can find by preparing the stock statement. So the stock is 3,000 opening, add purchases less COGS is equal to closing. So the closing stock is 8,000. Purchases, the COGS is given already, 10,000. So that means the balancing figure is the credit purchases during or cash purchases during the period. Will be already taken the creditors and credit purchases assumed to be 0. So this 15,000 will assume as a cash purchases. So the expenses paid during the period, can be seen from the expenses here. We can see that there was 8,000 opening outstanding expenses plus the current expenses minus the closing will give us the expenses paid during the period. There is no tax, so tax will be 0. So the cash from operation in a direct method is 55,000. So in indirect method we try to adjust the profit, PAT, add depreciation, add amortization, add interest, and plus minus the changes in the working capital. Whereas in case of a direct method, we try to find the actual collection and actual payment. Either way, we get the same result. So therefore, when the opening balance sheet and closing balance sheets are given, an income statement is given, it is possible to prepare the cash flow statement by finding the cash from operation by using a direct method or the cash from operation indirect method. Thank you.